Hey everybody, Randall Cornett. Hope you guys had a great day. I wanted to make a quick video. I wanted to summarize some key highlight points from the Adam Arons and Trey Trades interview. I want to go over the updated short squeeze score according to Fintel, which is the highest I've ever seen it be. And then also we're going to look at some of the options that have been purchased today that are extremely bullish. I've mimicked those trades, or one of them, and I'll go ahead and report that as the time comes. As it gets closer to that option expiring. I think you're going to be really juiced about where the big money is putting their money in some of these options. So with that being said, we'll jump right into it. So you guys know that Adam Arons and Trey did have an interview today, and without further ado, we'll just jump right into it. The first thing that they talked about was Mudric Capital, and I know that you guys seen they had that original sell-off of that 8.7 million shares. AMC was able to bring in $239 million in cash, and they purchased those shares at $27.12. What's important to realize, and Adam highlighted this, that Mudric Capital basically was a saving grace for AMC before us apes stepped into the playing field. They lent AMC over $100 million, which Adam believes is a catalyst that eventually led them to raising over $1.2 billion between mid-December and late January. Adam doesn't believe they would have even survived not going bankrupt without that money from Mudric Capital before us apes joined in the party. So that's one saving grace, one thing that Adam did give them credit for. Another thing that's important to understand the sentiment and Mudric not being malicious towards us, they own over a couple $100 million of AMC debt. So they have an incentive, because they own such large amounts of AMC's debt, for AMC to be prosperous. That's a point that he did highlight, and I think that that's really important. They want to make good on that debt, that money, that debt that they purchased. They need AMC to make money, so it wouldn't be smart for them to hurt the business. He did confirm that they did sell the 8.7 million, which there was a little bit of people that said, hey, it wasn't final, we weren't 100% sure, but it does look like they did indeed sell it. And he basically saying what they do with their business is their business. We have no real control over that. And I was saying this yesterday. It's like, let's not worry about things that we can't control. And when we look at the volume, it was like a drop in the bucket. And Adam also did clarify that he knows for a fact that they never made any public comment about AMC being overvalued. And the comments they did receive were from anonymous sources that are not verifiable at all. So moving on from Mudric Capital, we could talk about the 11.5 million shares that were sold yesterday, and kind of what that means for us. So the apes, we had an understanding that everybody knew collectively that there was 47 million shares that were going to be diluted into the market. And the idea was that was already done, and there was only 46,000 shares left that could be, released into the market. And then we found out that 11.5 million shares that were sold yesterday, in addition to the 8.7 million shares that were sold to Mudric earlier this week, is actually not part of that 43 million. Those shares, so it equates to about 20 million in shares. So those shares, the sell-off that we've seen yesterday and today, are coming from what Adam explains as the management equity incentive program that we seen in the original proxy vote. And essentially what that means is how it's designed to work is that they had 20 million shares that were going to be given to management of AMC, actually at free, for them to obviously do whatever they want. If they want to, sell them, make profit or whatever, that's their incentive for being management. But instead, the management collectively decided they were going to take those 20 million that was basically their incentive program and use that and sell those in order to benefit the company instead of their own personal gains, which I think shows that the company genuinely is behind us. And I know a lot of people the past couple of days are like, F Adam Arons, this guy's not with us. But I think the company as a whole, they really are. And this should give you guys a little bit of peace. So that he did say that the new proxy they issued highlights that management equity incentive program is now at a zero balance. So there's no more shares for them to use from that pool. So the only shares that we know of, and this was confirmed in the video, is the 46,000 shares that they have left from their whole entire pool of shares. So Adam confirmed they don't expect to be using any more of those shares. So we have once those 46,000 shares are gone, the dilution's done. We're not going to worry about any sell-offs. We're not going to get surprised by that. And I think that is going to calm a lot of apes' nerves, right? It does for me, at least. So I hope that you guys understand the importance of that. Another thing they did talk about, which I thought was important, is their net debt. Originally, they had $6 billion in debt. Now, with the sell-offs and the capital they were able to raise, they now only are $4 billion in debt. And the majority of the debts don't even have to be paid back until 2025, 2026 range. That gives them 4 to 5 years of strong earnings as theaters come back to normal from COVID to pay down these debts. Adam Arons even talked about the potential of possibly refinancing, working with the banks to stretch out the maturities even further of that debt. So possibly taking that 2025, 2026 range to pay those back, extending those out much longer. The overall sentiment that I got from the video, that he's not concerned with debt positions, and from an overall fundamental standpoint of the company, that is good stuff for us. Another good tidbit from the video, and I know a lot of people are waiting on this, but from the shares that they did count, and I am still thinking this number is not accurate. That could be just me, but I'm just looking at the data and trying to be as factual as possible. Adam Arons did announce that the outstanding share amount was 501,780,000 outstanding shares. So we know that that is above the free float, and I think that it's a very conservative number. I do believe it's much higher than that. Still good news, and this is just the data that is available to us at this time. And as far as the FUD that we've heard about, the potential of a stock split or a reverse split, that was addressed in the video as well. And Adam Arons did confirm that they do have no plans of doing a split or a stock reverse split, nor can they do it without shareholder approval. So that's not going to just get sprung on us. And then the last thing they really talked about that I thought was of importance was the fact that on the next proxy vote, they are going to be asking for an additional 25 million shares instead of the original, the big number, the 500. And he pretty much was pretty bold and straight to the fact that he said that he doesn't believe the apes would approve 500 million shares. And I don't think that we would. I think he might even have a hard time getting the 25 million approved. That being said, that's the main things that I took away from the interview. So I hope that was a good breakdown for you guys in case you weren't able to watch it. Moving on past the interview, I do want to take a look at the Fintel. Sorry about that. I do want to take a look at the Fintel information as far as the short squeeze score goes. Now, I've been watching this for a while, and I've always said take it with a grain of salt because I've seen it high, never this high, but I've seen it in the 90s, and we haven't seen a whole lot of action from that. But this just feels different to me. I can feel it deep down in my plums. I just believe that this is close. This is the highest I've ever seen it be. And we're in a position of 7 out of 8,914 securities. And just to give you guys, I'll just break down what Fintel describes what the short squeeze score is based off of. And it says the short squeeze score is a result of a sophisticated multi-factor quantitative model that identifies companies that have the highest risk of experiencing a short squeeze. The scoring model uses a combination of short interest, float, and short borrow fee rates and other metrics. The number ranges from 0 to 99, with higher numbers indicating a higher risk of a short squeeze relative to its peers, and 50 being the average. And this is updated multiple times a day, and this is the highest I've ever seen. So this can only be from a score of 0 to 99, and we're very much on the top end of that. So I hope that gets you guys excited. I feel this in my gut. I think we're so close, guys. Moving past, this is the big daddy stuff that I'm most excited about, me personally. So what we're looking at here, I guess first, because a lot of people like this before I jump into the big options, if we want to take a look at some of these dark pool prints, let me refresh this page because it does look like it got a little stuck up and it populated too many of these fields. So let's go ahead and refresh this real quick. So if I want to show you guys the alert section here, and let me put in AMC. I don't know why it reset. Sorry about that. Okay, so now we're looking at AMC. It just loaded up. So we did have a rather large dark pool trade today, 569,000 shares. That was at 29 million. And this whoever did this purchase was did it at $51.34. That was the price of the security at the time. There was another 100,000 dark pool block at 6.1 billion, and they did this at $61.56 at the time. And so if we want to take a look at some of the actual big block trades, these are not dark pool trades. These are just done OTC, which is usually, like firm to firm. This data, we can kind of see it, though. It's not being hidden as much as dark pool, but there was some rather large institutional buyers today. We did have one person pick up 1.8 million shares, and that was a $79 million purchase. And the second one that I could see that was big for the day was 1.2 million shares, and they did that at $61 million was the total cost of that, and they did that at the price of $50. Now, let's look at the juice. Here's what I want to show you. So if we scroll down here a little bit, and let's take a look at some of these big calls that happened today. And obviously this list is going on and on because we had a piss ton of call action. So I'm just scrolling down right now because after this update, there's actually a crap load more. So I got to scroll here and figure out where the hell I'm at. And I don't want to miss them, right? So if we want to say, I know the calls were on the 18th or the 4th, I believe. Let's take a look here. I'm going. This is a giant one actually right here. So 618, 145 strike price call. This was purchased. This is a block. So this is done in one big transaction. This was $717,000 in options at $145 strike price. This is absolutely monstrous, but this is not even the biggest one. Let me filter this out actually so I don't have to spend too much time looking through all these for you guys. So let's check it out. Okay, set filters. And this should have set us up so we can quickly see this here. And I want to do not above ask. All right. Let's dig on down into this. And I'm sorry about this delay. I know you guys are like, what the hell is going on? But I had all this set up and now it looks like I lost track of where the hell I was at. Okay, here they are. So look at these two trades right here. So at these strike prices, this is what I was trying to highlight to you. So 6/18 expiration date are both of these. One strike, this top one, the strike price right here is at $120. This is a call. They did this block. So they bought 3,600 option contracts. It's a big block trade. $3.24 million. This is the trade that I mimicked. So when I seen this alert went off, I obviously didn't do it in this magnitude, but I went and bought the same option. I'm not suggesting you guys do this. I'm just doing this as a case study, kind of to see if I can follow this big money flow and see if these guys are really riding this out. I have a hard time believing that somebody is going to spend $3.2 million on that strike price if they don't know something, if they're not betting big on that. But that's not it. And I wouldn't be surprised if this actually isn't the same person here, okay? Because they did these transactions, they fired them off pretty much at the same time. Or maybe the prices changed so fast that they actually had to do, it just increased a little bit more, or it looks like they got a little bit more in their position here. But I'm pretty sure this is the same person because the timestamps are identical. So if you look here, the same date, but a different strike price. This strike price, this bottom one is not $120, it's 95 cents. So they bought 3,000 contracts at $95 strike price, right? And that value of that was $3.18 million. That's the largest amount I've ever seen in call options for AMC specifically. Like somebody dropped a crap ton of money on this. They're betting big. And I believe that these guys are onto something that we may not be. So I did mimic that first trade at 120 strike price, and we'll see how that you know, where I land on that. I'm hoping that it's smart and these guys are onto something and they're just bullish as hell like we are. But if you guys want to look, I mean, honestly, check this out. Those are the largest ones, but look at these 618s here as well. $90 strike prices. These are all just under $1 million on these calls. So we're seeing some fairly large stuff. Look at $80 here on June 18th as well. 1.6 million, 1.7 million. So there is some big stuff going on. And you know that, as I say, follow the money. Look, there's another one on 625, $80 call, 1.17 million. This one might be the same individual as well. Oh no, because there are different timestamps. These bottom two might be $120 strike prices right here. Calls 1.26 million, 1.5 million in costs. These are both sweeps, meaning they're going to a bunch of different exchanges, and they are basically getting them filled as quickly as possible. So that's interesting to see to me, guys. I'm bullish as shit, and I hope that you guys are too. Again, AMC, most active calls on the day, beating Tesla, BlackBerry. So you guys know the sentiment is there. And again, I can't stress enough how this option movement is bullish as shit, guys. Like, that is huge news. It gets me. That's like the most exciting thing that I've heard today. With that being said, I think that's pretty much it, guys. Oh, I do have one other fun thing for you guys. I did manage to get a screenshot of this, and I made a tweet, and I feel bad, but it's too late now. It looks like other people have jumped on, took screenshots of it, or they got screenshots of their own. I just didn't want Adam to not like the community or be discouraged from coming on interviews again, but it's too funny, and now that it's spreading around, I feel a lot more comfortable displaying it. This is from the Trey and Adam Arons interview, and there was a scene where Adam Arons' phone kind of fell down, and we got a glimpse of what he was wearing, and I think it's safe to say the shorts have not covered. It looks like he's not wearing any pants here, and that's the life of being an ape. And so, again, that's very bullish. If you guys like the content, please drop a like, subscribe to the channel, please. It means a whole lot to me, and I enjoy, like, if you guys know that I'll spend the next 2 hours going through the comments, chatting with you guys. I literally am so thankful for the community. You guys have been absolutely great. So that being said, I'll catch you guys later. Love you long time. Peace.